Hey guys, it's that Dividend guy coming at you with another dividend investing video. Hopefully everybody had a GGD, a great green day in the market. Always wish the best for my fellow investors and subscribers. So let's take a look at the overall portfolio performance, some of the changes I made to the watch list and the individual stocks. So for today, we're up over $300, almost $4 actually, which is insane. Then on the week, we're up $1,600, or up 10%. Wow, how's the 3-month mark looking? Still down almost $500. 3-month mark, we're still down 27, so 3K. So we're at 19.9 right now, guys. We're so close to 20K. After this month, when I transfer over the money, we'll technically be at a 20K portfolio. That is crazy to me. That's really good progress. And then for the year, we're up 37% for the past year at $4,500, and then all time we're down to $343 since April 13th. So today's the 9th, technically the 10th. So Friday, Saturday, so Sunday will be the 2-year anniversary of me starting on Robinhood, because it's since April 13th. It's the 9th, so 10th, 11th, 12th, 13th, so 4 days. So Friday, Saturday, Sunday. So Monday will actually be my 2-year reunion, which is awesome. Let's look at the stocks today. So, O Realty, we have 15 shares, $870 of equity, 45.38 is our average cost. 5.1% of the portfolio is in O, up $70 today, up 186 total. I'm thinking that every month I'm going to try to put $700 into O, and then once the stimulus check comes in, I'm going to put that into IBM, because that will boost me up a really good amount. So, that's the plan right now. Then we have Altria Group, 98 shares, $4,000 of equity, 45.30 is our average cost. 23.7% of the portfolio is in Altria, up $76 today, down 430 total, down about 9.7%. Then Coca-Cola, 20 shares, $986.80 of equity, 51.26 is our average cost. 5.83% of the portfolio is in KO. Today we're up $30 total, we're down 38. FRT, 1 share, $86 of equity, 113.88 is our average cost. About 0.5% of the portfolio is in FRT. Then Pepsi, 1 share, 134.20 is our equity, 131.54 is our average cost. So we're up total now. Today we're up about $1.60 or 1.2%. Total we're up $2.66 or 2%. Then we have Disney. We have 2 shares. 211 is our equity, 105.53 is our average cost. 1.25% of the portfolio is in Disney, up $8 today, down about 6 cents total. So we're pretty much break even on the Disney position right now. Then we have Lowe's. We have 2 shares, 191.80 is our equity, 186 is our average cost. 1.13% of the portfolio is in Lowe's stock. Today we're up 310. Total we're down about $10, or only about 5%. Then we have AT&T. Oh man, I wanted to get some more. I was hoping it was gonna stay at a suppressed level of about $28 to $29, but it's up again. So we have 63 shares. You can tell I'm salty. About $1,940. Sorry, long day, guys. Of equity, 31.05 is our average cost. So even buying right now is a good idea. About 11.5% of the portfolio is in AT&T stock. Up $51 today, down 22 overall. Then AbbVie, 60 shares, $4,009 of equity, 72.22 is our average cost. 28.43% of the portfolio is in AbbVie stock. Today we're up 95 total, we're up 475, so we're actually up now. I did buy this at a pretty good suppressed level, but it did get lower than that by a decent amount, so I'm happy to see that we're at least positive on it. Then American Express, we have 3 shares, 286.50 is our equity, 97.73 is our average cost. 1.7% of the portfolio is in American Express, up $10 today, down $6.69 or 2.28%. So still down, still a buy for us on the average cost basis, but I would buy this anywhere below $100. So I still have a little bit of growth, or a little bit of space there for American Express. Then Tanger, 21 shares, 162.33 is our equity, 12.05 is our average cost. It's been kind of back and forth for me. I thought about putting the 700 from last month into this stock, because it would have yielded me about $41 of passive income for this set of months, which would have been really nice to pour into the third set, being 3, 6, 9, 12. But I decided against it just because malls are kind of risky, in my opinion. I'm comfortable with the stock. It is a dividend aristocrat. I have other investments that I like more than this one. And this is already self-sufficient, so I'm happy with the position. We're up $27 today, down 90 total, or down about 35%. Then Johnson & Johnson, 2 shares, $283.50 is our equity, $135.79 is our average cost, 1.6% of the portfolio is in J&J, down $3 today, up $11 total, so we're up on our total position. Then 3M, 2 shares, about $300 of equity, so I have more equity in that than I do in in J&J. 147.28 is our average cost. 1.7% of the portfolio is in 3M, down $2.42 today, or up $1 total. That's nice. Then we have Target stock, 10 shares, $1,040 of equity, $87.68 is our average cost. It's never gotten down that low again, so I'm real salty about this position too. This and AT&T are the two that really get me. 6.16% of the portfolio is in Target, down $4 today, up $165 total. This is one of the only stocks, which is crazy, that is not in my portfolio that has not been affected by the virus or any of the scarcity in the market. This, for some reason, Target's been up, which just Clorox was as well, and I took it off the watch list along with Walmart because they haven't been affected by the scare or anything. So Target is just, man, so I'm happy that it's up, but I'm ticked because I want to buy more because it's a king. Then we have Dominion Utilities, always a good idea in my opinion. 2 shares, $163.10 is our equity, $80.52 is our average cost, so still a fairly good buy right now. About 1% of the portfolio is in Dominion. 666 we're up today. Total we're up 207. Exxon, 32 shares, $1,400 of equity. 70.59 is our average cost. 8.32% of the portfolio is in Exxon Mobil. Today we're up 480. Total we're down $850 or 40%, which is insane. Which is funny because look at Exxon and Walgreens close at the same amount. Exxon will pay you 78 cents a share, and then Walgreens will pay you, I believe, 54 cents a share. So Exxon's a better value right now. We have 1 share of WBA, $44 of equity, $54.60 is our average cost. 0.26% of the portfolio is in WBA. We're up 91 cents today, down $10 total. Then let's take a look at the watch list. JP Morgan and Chase, I wanted to add a bank. I looked at all of them. I looked at Wells Fargo, Bank of America, US Bank, Citigroup. I like JP Morgan and Chase a lot right now. Because if you look, they're at about $103, so they have $37 of upside. They have the best dividend that I found out of the bank stocks, and it's a huge bank, so I'm not worried about it at all. I got rid of Walmart for JP Morgan. Then we have Kimberly-Clark, which I'm a huge fan of. Toilet paper, paper products, paper towels, tissues, that type of thing. They are a dividend king. I do think they're a buy right here. Illinois Tool Works as well. Definitely a buy at $160, still $30 upside in the stock. SX Property Group still has about $100 or about $90 now of upside in the stock. That's the apartment REIT. I'm back and forth. So I know where the check is going to go once I get the check is going into IBM. I've already decided that. But the $700 could either go into O. This is one of the other ones that I was thinking about putting it into because of the great upside potential that's in the stock. And it does pay, I believe, about 95 cents to $1 in dividends as well. The only issue is, I'll show you guys real quick, $700 doesn't buy you much of this stock. See, with the dividends that I get from Ultra, I could afford that. So 3 shares. So this would only give me like $3 versus O, which would give me like $15. So that's why, see, so dividend wise, it's like, but I really do want to own apartment complex. It's a very good idea to not necessarily just diversify as in like the businesses, but the sectors as well. And I do like REITs. I do already have O, which is retail. I have SKT, which is malls. This would be apartments. I also have storage and McDonald's, and then telecom towers as well. So I'm trying to be diverse within. So I'm trying to have diversification within my diversification with this. So Essex Property Group, I say it's a buy because of the upside. Colgate's below 70, I'm buying it. Procter & Gamble, it's below. I probably wouldn't buy it because it's $13 upside. I try to go for 20. But I would buy Procter & Gamble just because I'm a huge fan of Procter & Gamble. That's one of those that I just like would ignore the upside because I love it so much. It's my second favorite dividend stock of all time. So definitely want that in my portfolio. I just wanted to buy it at more of a suppressed rate. American States Water, another utility. I'm not buying it because it's only $7 or about $10 below, so I'm not touching it. Waste Management still has like a $20 upside. Yeah, like $26, $27 upside, so I'd buy it. Love Waste Management. Then we have IBM. That's where my stimulus check is going, or at least that's what I'm planning on. Anything below like 125 I'd buy. So, because I still have like a $23 upside at 125. So whatever price IBM's at, my stimulus check is going into it. It helps. It's the best paying stock that I can find that I trust. It has a lot of patents. It's big blue chip. You know, I'm a fan of the stock, so I don't mind buying it anywhere below. Probably like 125 to 130 is my range that I'd want to buy it at. Next, Crown Castle. Like I said, this is just another way for me to diversify within my diversification. It's a good play on telecom without being directed to telecom. So they make the towers that they rent out to cell phone carriers like U.S. Cellular, AT&T, and Verizon, Sprint, T-Mobile. They sell their spots on towers, and then that's how they make their money. So, and I know that people are addicted to their phones, so investing in that technology, I would much rather own something like this than an Apple that like makes the phones. I want to buy Apple as well, but I'd rather buy a telecom provider as an AT&T and the people who make the towers that they're dependent on, because then I make money from people using their cell phones. But I will eventually own Apple. I do love Apple. But like I said, this is just a way to diversify within my diversification. Next, McDonald's, same thing, diversify within diversification. So it's a restaurant, but it's a real estate restaurant business, and I love that. So they sell burgers and fries on real estate. So they're really a real estate company. It's like a fast food joint is a front so the burgers and fries are a front for the real estate company, and that's why I like it so much. So definitely want to own some McDonald's here in the near future. I might like lean off the gas with O and buy something like Crown Castle or McDonald's. And then lastly, I think McDonald's is a buy. Anywhere below like 200 would be $20 of upside. So right here we have 40. So yeah, definitely McDonald's is a buy for me. Public Storage, anything below like 240, so with $26 of upside. So this has got a lot built into it as well. So Public Storage and ESS are the two that I really want to buy right now because they have such high upside potential for the stocks when they bounce back, and the real estate, which I think is timeless. So I definitely would buy me some Public Storage right now. So right now the goal is $700 into the market, and it's going into O. I might change my mind in the coming months, but right now it's giving me like 13. So like if you add up how much O pays, so every stock pays 4 times a year, right? So if you add together, so with the 15 shares that I bought, if you add the 23.3 cents times 15 is like $3 and something. But if you times that by 4, because that's how usual stocks pay, it's not monthly, so it gets paid 4 times a year, I make $13.96 from that investment. So if I can double that, that's like $27. And then see what I mean? It just keeps on doubling as I keep buying 15 shares. So it's going to be tough to let the gas off of O, but that's going to be my main goal, is to buy more real estate. And once O buys itself or other stocks, then I'll be more, I'd be willing to take off the gas. But right now, O is going to be the main investment for my portfolio. And I do have dividend drip, I believe. Now, I just got it on Robinhood. So I should be dripping automatically, getting more shares of companies. And I do have fractional shares as well. I unlocked that too with Robinhood. So they gave me access to fractional shares, interest on the money in the account, which is nice, and dividend reinvestment. So some of the share counts might be weird because the dividends will buy like a part of a share, but I'm happy that I no longer have to manage the portfolio. Like when I get paid by, say, Altria this month on the 30th, when it pays me, it will automatically put that $82 back into the stock and just buy me as much as it can. So that's really the goal here, is to make the investments invest back into themselves, and then it's a complete money machine. I don't have to worry about it. Don't have to, allocate funds or anything like that. It all does it for me. So anyways, guys, I'll see you tomorrow with another dividend investing video. Tomorrow's Friday. I'm pretty burned out tonight, so hopefully I have a little bit more energy knowing that it's Friday, but Bear with me here. I'm just trying my best. I'm super excited. I'm on track. I'm keeping up with my goals. And I'm super passionate and I love this. So the goal, guys, my main, I don't know, I don't say this every video, but the whole reason behind the portfolio is because the purpose is to give my kids generational wealth and my friends' kids generational wealth. So, the goal, the numbers I have right now, if I don't buy at like super suppressed levels, my portfolio, if I bought everything where I had bought it before, I'm on track to be at 2.4 million when I retire. So a million of that is going to my friends' kids, Penny and Link, and they will split a million. So each will get 500,000, and I believe that should give them like few $100. I think it's a couple $1,000. I think it's like 4,500, or I think it's 7,500. I think a month. If you divide it out, because 500,000 times 7% equals out to that much. And then you divide the amount by two, because splitting it up. But they should get about $7,000 a month, which I hope they can live off of that, because I mean that'd be phenomenal. I live off of like two, so like if they can't live off of seven, there's something wrong there. So half of it's going to them, guaranteed, and then if I have kids, I'm gonna build my portfolio up, kind of like Warren Buffett did, for my entire life, and then I will be giving it to my kids. So Mitch's kids are going to get $1 million, and I'm going to hold on to 1.4 and then pass it on to my kids. Or the other idea that we had was we're going to say, screw it. With $1 million, we're going to buy a mansion, and that's going to be like our lineage thing that we're going to give to our kids, is the house, the mansion that we're going to live in as a family, and it's going to be cool. So either way, either his kids are going to get $1 million or we're going to buy a mansion. So that's my goal. That's my end goal. So anyways, guys, just give you a little bit of philosophy and kind of motivation on why I'm doing it. So thank you guys so much for watching. Remember to hit the subscribe button on my channel, That Dividend Guy. If you love passive income, real estate investing in general, this is definitely a channel for you. So hit the subscribe button, and when you do, hit the bell notification so you don't miss any new content. I post Monday through Friday as consistently as possible, as long as my life allows. But I try to be consistent. So if you're a fan of consistency here on YouTube and investing, you definitely want to stay here and hit subscribe. So thank you guys so much for watching. I'll see you guys in the next video. Take care, guys. I'll see you tomorrow.